What's going on, everybody? Welcome back to It's Just Trading trading recap. Today is February 6th. So we just gonna hop right into it. So I was looking at, I do my step down analysis or my technical analysis to see which direction I'm going. So on the 4 hour, I'm bearish. When I drop down to the 1 hour, I was checking to see like what we had done. So on the 1 hour, this is the high that I would need to be closed above to consider us bullish, because in this downtrend, this is the high that made the lowest low. So before market open, let's see, go to the 15 minute. All right, so you guys just saw on the 1 hour, the 1 hour switched bullish, and we left behind this fair value gap right here, this 1 hour fair value gap. All right, and then we have this 4 hour fair value gap that could show us some resistance. So if I were to be looking for a trade, I'm gonna go ahead and play this next candle up, and then this next one to bring us all the way up to where we was kind of currently at before market open. So same thing, we went longs here, we switched to the longs here, and then I dropped down to my 15 minute, and I want to see what my 15 minute did. And same thing, my 15 minute shifted longs actually here, but we already kind of tapped into this fair value gap. But we have this 1 hour, and we have this swing low, which is also what created the highest high on this 15 minute uptrend right here. So me coming into market open, I was wanting price to pull back here before continuing the uptrend. So if price came back into this area, it would have gave me two things. We would have swept this low inside of this 1 hour fair value gap, and me, in my eyes, I'm gonna look at this as being the fuel to be able to push us up. I wanted us to come more so close to the center point of this 1 hour gap, but I was just going off of whatever reaction I would get at if we got to it. We could have barely tapped it and did it, or we could have came in a little bit and did it. Regardless, I'm still kind of looking at the reaction of the candle before I even get in the trade. All right, so we're just gonna hop in. So as y'all can see on the 1 minute, we are definitely in a downtrend. We're downtrending right here, and that's good for me, because I want us to come into this area. I want us to come into this hourly fair value gap to give me a reason to get in the trade. So let's see, I wasn't running 5. And essentially, when price comes into that 1 hour fair value gap, I'm looking at the reaction of the level of this 1 hour fair value gap to tell me, hey, okay, I'm gonna get in this trade. Also, we're early into that 15 minutes. That low that I marked up, the area that I'm watching, is, like I said, is also the low that would flip my 15 minute back bearish. So currently right now, my 15 minute is bullish, my 1 hour is bullish, and I'm looking for this area to just be a liquidity sweep and us continue up. And it happens in the first 3 minutes of market open. So essentially price comes into this fair value gap, right? And this is about where I got my feel at, or maybe it was a little bit higher. I had to check my my actual entry point, but once I seen price come in here and it looks like it wanted to start reject, that's where I got in. And I was targeting the 50% of here, but I ended up taking it at just at the bottom of the fair value gap, because I didn't want to see any type of rejection here, or in a potential reversal coming back down, stopping me out in profit, because I did move my TP into profit like this, not my TP, but my take profit in like this. And what I ended up doing when we got here and I started to see some of the rejection, I took off 2 and I left this, and then we ended up going up and taking me out at this level right here. It doesn't necessarily matter as far as like where I got out, but the trade idea is, hey, we came into the hourly fair value gap. I got the reaction that I wanted out of this hourly fair value gap before this candle even closed. I'm like, oh yeah, I see I visually see the pressure of pushing up out of the hourly fair value gap, not trying to, malinger around here and end up flipping the 15-minute. It literally got out of there. And then if you paying attention, you also will see that this is the high that made the lowest low. Now, if you were to have gotten in this trade on the market structure shift, and this is kind of where just trusting the trade or trusting your idea or your thesis of what you would like to see happen. Right here, we got our 1 minute market structure shift back to the upside, right? That also would have put us in alignment with the higher time frame, because now my 1 minute is longs, my 15 minutes long, my 1 hour, all of those would have been long plays. So you could have entered here as well, but your stop would have been kind of steep. 95-point stop to try to get to the 50% of this right here. So you would basically got a 1-to-1. You would have got a 1-to-1, right? It still worked, but I like the idea of catching it down here, catching the trade down here, and ended up getting like a 1-to-5 R trade in. So that's the trade recap of the day. Same thing that I teach, the same thing that I've been studying is market structure shift alignment. That's it. Just find all the market structure shifts and put them in alignment, and that's how you get with the trend. Because people say the trend is your friend, but they don't really break down how what that means. The only trend that's your friend is the higher time frame trend, not the smaller time frame trend, the higher time frame trend, because the higher time frame trend is where we're actually going. So putting yourself in alignment with the market structure shift alignment, that's how you're gonna be more successful and higher probable, and you trust this a lot more. And if you got any questions about, oh well, how do you know how far to put your stop? Well, I measure this out, and me personally, I'm not letting price go against me 30 points. Anything over 30 points, I'm getting out. So I measure out the fair value gap, right? And if we come into this, if I enter just at the crest of the fair value gap, anything over 30 points, I'm out of the trade, right? So as you can see here, we came into the fair value gap and only got 10 points. You see what I'm saying? But 30 points is as far as I'm going to let price go against me. And depending on my contract size, that's good enough for me to take a L and then wait. So, okay, I lost 30 points. Price could come in there, stop me out, and then it does what I want. I'll just get in at the entry of the actual confirmation entry point at that point, to, get it back or whatever the case may be. But that's the trade recap of the day. I hope that helped you guys. Feel free to follow me on Instagram at It's Just Trading. Subscribe and like to the channel. And I'll catch you guys in the next one. Have a good weekend.